Hi everyone, I am Anushka Sonkar and I am a final year student at Shahid Sukhdev College of Business Studies, University of Delhi. And we are making this video under the guidance of our finance professor at SSCBS, Mr. Narendra Kumar Nigam. So recently, our finance minister, Ms. Nirmala Sitharaman, has made quite an interesting statement regarding the ongoing US dollar surge. So let's look into what she stated.
First of all, I would look at it as not rupee sliding. I will look at it as dollar strengthening.
So what does this statement actually mean and why are people calling it deeply inconsiderate? Owing to this statement, many people have tweeted against the central government that it is only trying to cover for its mistakes and negligence. Some people even raise the question regarding the statement if dollar strengthening and rupee depreciating are same thing or distinct. So let's move forward with this video and find out answers to all these questions. If we check the comparison between the USD and INR, the Indian rupee has lost 10% of its value. Moreover, the USD has recently passed the 83 rupee mark as well. So, with all of this going on, what are its implications on the Indian rupee? So, the first implication is that a weak rupee will translate to higher import bills. This simply means that the value of imports will increase significantly, thus leading to even more expensive goods and services for us. Secondly, if we talk about the price of oil, its price has already risen, due to which it is becoming more costly by the day owing to our already weak currency in comparison to US dollar. Needless to say, all these factors will eventually affect the Indian economy and drive it in the direction of inflation. Well, now you must be thinking that the people who called out on our finance minister's statement and called it one and the same thing must be right, no? Well, to break it to you, our finance minister has actually stated it correctly. Surely, the Indian rupee has weakened against the US dollar, but we should also keep in mind that it's not just about the INR, but even other currencies in the world are also facing the same situation. So if we compare our currency with other currencies, we can see that Indian economy is not performing that bad after all. So for example, if we compare Indian rupee with British pound, euro and yen, then the Indian rupee is up by 8%, 6% and 15% respectively, and up is just about the last year. So the real question is, why is the dollar soaring so much and what is the reason behind its skyrocketing? The simple answer to this is that the US Federal Reserve is trying to fight inflation, and due to that, they have ramped up the interest rates, which is faster than most of the global economies in the world. So if somebody has a lot of money residing with them, so they will want to increase their wealth and they would naturally drive to an investment opportunity which is safe and will give them consistent returns. And that is the reason why most people are running towards investing in the US government bonds. So let's take an example. A 2-year US government bond could fetch around 0.4% of returns, and that same bond can fetch over 4.3% of returns this year. It is a vast jump in the interest rates owing to which people are investing in the US economy. And when people invest in an economy altogether, it increases the demand for the money, which leads to the increase in value of the currency, and eventually it leads the economy towards inflation. But another question arises that why are people running towards an economy which is already fighting inflation? Well, the answer to this is quite apparent, as we always invest in an opportunity which seems better than the other existing opportunities and which is in front of us. Well, if we pick Europe against the US, the former is performing much worse. How, you ask? Well, the inflation level in the US is 8%, and if we talk about the European Union, it is around 11%. Forecasters have assigned a 60% chance that the US will slip into a recession by the next year, and for Europe, it is 80%. So now we all believe in history, right? So if we look into the 2008 global financial crisis, the US economy comparatively came into normalcy much before than other economies in the world. And this is why the US economy is more reliable from an investing point of view. So yes, The dollar is strengthening and the trend is likely to persist, but we should not get confused as the Indian rupee is right at the place where it has been, all thanks to RBI, which has been constantly engaging in the currency management and has done quite a job. So the RBI is selling US dollars in the foreign exchange to prop up the value of the Indian rupee. Our forex reserve has decreased from $642 US billion to $525 US billion, which is a significant decrease in the past year. RBI has always wanted to control the excessive volatility in USD INR exchange rate and not fixing the price to a level. They simply didn't want people to panic. Well, it doesn't seem that the US dollar is going to lose its luster anytime soon, and the import bills are also going to get more expensive for us. But with all of this going on, the Indian companies that borrowed money overseas in the low interest rate regime are now facing many difficulties at this moment. So when the dollar appreciates in value, companies will have to take out more money to pay their interest cost. So for example, if earlier companies could pay $1 of interest with 75 rupees, now they will have to pay over 80 rupees for the same. So now, since the interest rates are headed higher, Indian companies have hit a pause button on borrowing from the overseas market. Since April, most of the companies have stopped raising dollar money, and this has been the longest dry spell in 13 years. So I would like to conclude this video on the note that even if we say that rupee is not sliding, the appreciating US dollar will have an impact on our economy, which will make things difficult. Well, with all of that being said, some of us must be thinking, what if $1 was equal to 1 rupee, right? That would have been crazy. We kind of faced a similar situation in 1947 when $1 was worth 3 rupees 3 paise. And in today's date, that $1 is worth 83 rupees, and that sounds a bit interesting. Well, that would have been a nightmare for India in today's era, as why would any US company would like to deal with India, and why would they want to import from India, and why would they even want to hire anybody from India if $1 was equal to 1 rupee? There would have been no benefit for US. Thank you so much for watching this video till the end. I hope this video was informative for you people. Do not forget to like, share and subscribe this channel.